Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Today's video is going to talk about BABA. Our swing expired last week, as I'm sure a lot of you guys know. And with earnings this week, we're going to discuss, or earnings this morning, we're going to discuss why we decided to not play the stock for the report. So if I showed you this headline today, Alibaba stock surges after revenue and adjusted profit rises, but comes up shy of views, right? If you saw this headline and you saw that it said stock surges, you would think, slam dunk for the options, right? Um, Momo name, like Baba, beats expectation, stock surges. You're like, okay, you're definitely making money on these options. Well, let's see what happens here. Baba is a very consistent stock. So at least it has been for the last year. We'll get back into today later. But for now, let's talk about why we were in the first place. It's a very consistent stock. And what we noticed and how it played out was the week to 2 weeks before earnings, each of the past 3 quarters, it would go on a really nice run. So it would basically be people buying in anticipation of great results, right? That's kind of how we read it. Like the stock would go on these crazy runs, so you would assume that people, because there is some short interest, but it's not that significant. So you would think it would be people buying into those earnings. So you can see November start here, like the week before, runs right into earnings. January right here runs right into earnings. May here, right, runs right into earnings. So when we initially got in the trade, it was back when Baba had fallen to the 200-day, and we wanted to get in a swing, knowing that there typically is a run before earnings, and we liked it at the 200-day because it was kind of a significant move in average. You could see it kind of held here, dropped, had a really nice bounce off it last time, dropped and held the 200-day. So when it got down to that area, we got interested, but just like this consistent negative headlines of the China-U.S. trade spat just really weighed on it. And when it broke down, it just kept sinking and sinking and sinking. And unfortunately, the options expired worthless. But it doesn't mean it didn't bounce, right? So it got down to this huge 165 level last week. And then, right on cue, a week before earnings, it just went on like this, really nice bounce. Held 165 perfectly and went on this really nice bounce. Very similar to actually what it did last quarter. So, bad timing. Our trade expired. But then with earnings coming up, we needed to make a decision whether we were going to play it on the report. And there was a couple things to consider, right? So you have the technical setup, and then you have the options setup. And looking at the technical setup, it's kind of interesting. 165 is a huge level on the downside, and then you have this really heavy overhead supply area. You got the 200-day, the 50-day, and the 100-day all within a 2-point range on the upside. The stock went in at 177, so it was kind of in between 165, below 177, 178 area. So it was kind of sandwiched between two levels. Looking at the options, they were pricing about a 10-point move, and that is a lot. It's not. It's not a that is a big move, but in terms of the last 2 quarters, it's not that significantly much more. Last quarter moved about $8. The quarter before that about 12. So the average of those 2 quarters about 10. So it's basically right in line. But when you go back and look at the last couple quarters and how it responded, it kind of gave us pause. So last quarter, even though it ended up rallying, it opened lower. So that was like a clean beat, and as clean of a beat as Baba's had recently. And it opened red. It did end up rallying pretty nicely, but it opened red that morning. The quarter before that, February, opened red, and then in November you can actually see same too. It ended up finishing red. So it's like even though like the numbers have been pretty solid, like the stock hasn't responded terribly well, and that makes it difficult because you're bullish bias just because the growth has been so fantastic. 40, 50, 60% revenue growth. So you're bullish biased, but when it beats, it doesn't really get rewarded. And then on the downside, you have such a huge level of support that it's demonstrated. Buyers want to step in so many times. I mean, 1, 2, 3, 4, 5. I mean, that you can even say like the 170 area too. So there's such a big level of support on the downside. Such a kind of a heavy overhead area on the upside at the moving averages. And when you think about the past 3 quarters and the stock didn't really respond well to like good numbers, it really made laying out the money expecting greater than a 10-point move. I mean, you could see visibility for maybe a 10-point move, right? It was about 8 to 9 points to get to the moving average congestion area, and then about 10 points to drop to retest last week's low. But is there going to be more than that? Is it going to be significantly worse or significantly better? I mean, our thinking was probably not. So when we took all that into consideration, it just didn't seem like laying out the money was worth it for this quarter. And no matter what it did today, we still planned on watching it going forward for a trade. So, whether it did have a big move or not, we were planning on keeping an eye on it. Maybe it sets up and gives like another trade opportunity. As it stands, I mean, it had a decent start and then it sold off and it's kind of chopping around the unchanged mark. So, sometimes, to be honest, the best trades are the ones you don't do, just because, it can save you, it can save you like the price you lay out for like the options, right? But then it also prevents you from waiting for a better setup and getting involved, because then you already have a bias on the stock, and you don't let it set up the way that it needs to get involved again. And it kind of highlights why we kind of in the webinar, which I definitely recommend you guys going back and checking out if you haven't. We went through some of the points that we look for when we're screening for earnings setups, and Baba it didn't meet enough of the points to really get us interested. So that's why we just felt it was best to be on the sidelines for this one. Again, if you're just tuning in this week, definitely make sure to check out the webinar Kurt and I did on Tuesday. It covers options mistakes to avoid and a few different event trading strategies. Also, definitely check out the link in the video description, as we are currently offering an absolutely ridiculous deal, if you ask me, for the Options in Play newsletter and also the brand new ground up education course. So we created this course with traders in mind. It focuses on the information you need, and it really cuts through a lot of the complicated math to help you understand options and really start trading them more profitably. So definitely check that out. As always, if you have any questions or comments, please reach out. We'd love to hear from you guys. Best of luck trading, and I will talk to you guys all soon.